So in problem E, exercise 3-2, um, exactly same thing is happening. You have a month of April and a month of May. And this question asks you for three scenarios, that in all those three scenarios, do an adjusting entry on April 30th and then do a subsequent entry during May. Okay, so just like the problem I did in the previous exercise, uh, E3-1, the same thing is happening here. So I'm gonna do these three entries one by one. Okay. So in scenario number A, it says on April 1st, the company retained an attorney for a flat monthly fee of 3,500. So on April 1st, all it says is that this company retain an attorney. Okay, the payment, it doesn't talk about the payment as of yet, and it says that it's a monthly fee of 3,500 for having a lawyer, right? Uh, and you make the payment on May 12th, which is the next month. So the point is that you have a month of April and you have a month of May. So the same concept of accrual keeps coming back, that you used up lawyer or attorney lawyers services, right, during the month of April, although you're paying that for that service in on May 12th sometime, right, 12th of May, after the April ends. So when you're gonna book the entry, remember you have incurred an expense, which is the attorney expense, legal expense, right? And during the month of April, you used up the services. So if you're gonna make an income statement of the month of April, right, in this time period, you you must have an expense that is called a legal expense, right, or that you must have incurred. And so on, guess what, right at the end of the month of April, on April 30th, okay, April 30th, you're gonna book something called an adjusting entry. Why you're doing an adjustment? Because you know that some expenses have incurred, but you have not paid for it, so you must do an adjusting entry before you go into the next month, so that your expenses fully reflect all those expenses that you have incurred. So here you're gonna do an entry on April 30th, which is gonna look like this: that your legal fees expense. Okay, so this is how it's gonna be called: legal fees expense. It's gonna be 3,500 debit, right? Debit, and this side is credit. So the other side is cash. No, because you're not paying it till next month, till May 12th. So legal fees payable, you're gonna create a liability for 3,500. Why you're justifying in creating this liability account? Why? Because you have used up the legal services during the month of April. So before this month ends, you must do this adjusting entry to fully reflect all those expenses that you incurred during the month of April. And you remember accrual basis of accounting, that you are matching your revenues with the expenses in that time period, right? So your income statement for the month of April will reflect all the revenues for that month and all the expenses for for the month of April. So here your so when May 12th comes, right? that's when you have to pay the lawyer. And so now you're gonna do an entry, which is of course cash. You have to pay cash credit, 3,500, right? So you're gonna pay credit 3,500, and what's gonna be a debit? Um, so so sorry about that. So what's gonna be the debit? It is, should it be legal fees expense? So let's say if I put legal fees expense, if I do that, uh, and call it 3,500, so what I'm saying is I'm putting here the expenses for the month of April in the month of May, which is going to be wrong. This should be payable, right? Expense is already done. So what you're doing here is creating is paying off this payable for $3,500 by cash. Okay.